Howdy. So Bitcoin is looking rather bearish. I guess this is a little follow-up for the update I did a few days ago, where I said that things were looking like they could plop through back down to the sort of the 30 to 35k level, and it looks like that. So whether you're looking at this as a sort of a symmetrical compression, and there's a whole bunch of different support and resistance levels over here, either way there's a few key sort of supports around here, and it looks like this level is getting absolutely smothered on the daily chart, and a smothered level is a weaker level. I mean, it's very similar to this: smothered, shat right down. Again, if we're looking at this on the slightly lower time frames, yeah, this is just getting smothered. So I would not be surprised at all if we saw a little sort of move to the downside. Having said that, I'm probably jinxing it as I'm making just by making this video and saying that. Either way, another way you could look at this is a rising rectangle, rising channel. So I did a live session the other day, so I've got all sorts of random doodles here, so ignore this. Yeah, rising channels are not bullish, they are bearish. So there is a key difference between these two rectangles. You need to treat them like compressions, really. So rising compression in a falling market is a continuation signal, and this is the same. So rising channel, although it's pretty fat and wide channel, is still a continuation pattern. So whether it breaks to the downside now or has a little pump up before coming back down, I'm still, pretty bearish. I can't see 20k happening. I'm sort of there's just too much fundamental bullishness going on at the moment for me to see that happening. Especially when you look at on-chain analysis, the amount of Bitcoin is roughly almost about 100,000 Bitcoin per day leaving the exchanges to private wallets. So let's not bore you, let's go straight to that chart. Here we go. And if we were to zoom in here, so let's just open this up actually. Zoom in. Yeah, so yesterday, 29th of April, 82,707 Bitcoin left exchanges. Previous day, 99k, 92, 93, 101. Yeah, so basically, and for a while now, we've seen this mass exodus of Bitcoin from exchanges. And typically, whenever you see a huge exodus of Bitcoin from exchanges, the thing that normally succeeds that is a nice little bull market. So yeah, there's probably a bit more downside, but I just can't see the 20k level being hit. I think all the YouTuber pretenders and Twitter people on Twitter are probably will no doubt start screaming 20k, but I just don't see that happening. I think if anything, this is the support level to look at, around sort of 30. So I mean, I'm sat 100% in stable coins at the moment. I say 90%. There's about 80% in stable coins, 20% is in a Bybit account. So I can trade this. So it's all very well and go, oh yeah, things look bad, but I like to make money from my calls, and I do. And also looking at this, it could possibly be a very shitty head and shoulders. But either way, things have been falling nicely today. Everything, so Bitcoin not so much, but everything else has fallen pretty darn sweetly. This is the lunar move I said that would happen, back down to this level. We're getting there. Yeah, Ripple placed a little cheeky trade earlier. That's doing okay. Binance again on the 4-hour chart, that's just broken that support level there. So at the very least, we should see 380 at the very least. Sol has been sweet. I mean, this has been an absolutely great trade here. Shorted at there, we had two lovely little high tests there on the 4-hour. Had a super tight stop at about 95.21 ish, and yeah, that's fallen nicely. So that's that. Sand, yeah, same setup. So normally when you see setups, they're repeated across the board. Everything follows mummy and daddy crypto, which is Bitcoin, Ether. But yeah, so Sol and Sand, pretty identical setups, and they've both done pretty nicely. Same as Dot. Not sure if I placed the Dot trade. Let's have a look. Dot. No, didn't place Dot, but I did the Sol. So yeah, Sol 98.82 is when I got in. Let's double check this. 90. Sorry. That was the second trade. The first trade was up here. Yeah. So I've added to this trade now. Bybit's UI is pretty shit. So I end up placing multiple trades on these and I scale into stuff. So this entry price is not correct. 93.82. Sorry, 93.82. Yeah, we did place some earlier trades. So, for example, I know Atom. I've placed about 5 different trades on Atom today. So here we go. It says 1957, but that's definitely not correct. 1957. That brings it down. Yeah, no, we're shorting this a lot higher. It's just that every time I see, lovely high tests, I short the shit out of it. There's at least three high tests there that we've seen recently. But yeah, with Atom, I've been following this nice little trend. Now, the thing with Atom is, although it's fallen quite nicely, it is somewhat overextended from this trend line here. So you have to imagine there's like this rubber band trying to pull this back up. So I think we could potentially see the end of this little rally that we've had. This little fall today. So what I've done is I've basically, because I'm about to go to bed in a couple of hours, I've moved stops pretty damn tight across the board. So looking at Atom, I've moved a very tight stop, 1860, which is about there. So yeah, we'll probably get all of these being stopped out, but what I prefer to do, instead of just clicking close all and then confirm and then basically just killing every trade, instead of just snatching like that, I just move stops right up to the market, give it a little bit of breathing room, and that way you're locking in a good sort of 90% of all of the profits. But at least you're giving yourself a little chance that the market could run away. I mean, overnight Bitcoin could just be it could stop fanning around for this level and then just go, wee, hello 37k, and everything else will follow. So yeah, it's always good leaving yourself some opportunity. Other than that, I know everyone says that no one likes falling markets, but instead of just bitching and whining about falling markets, just learn to go with the flow and profit from falling markets. The thing with trading is that, like, if you are, I see and hear this all the time, going, yeah, but Siam, trading's not for everyone. It's better just to buy and hold. Well, the problem with buying and holding is, let's say Bitcoin in 2017 does this, everyone's happy. It peaks at 2018 and go, oh no, I'm not selling, even though, base support is broken. And people go, no, I'm just going to hold it. The thing is with buying and holding is that you could be underwater for 4 or 5 years. Or with cryptos, really, 3 or 4 years. But any other asset, the Japanese said that in the 1990s. And many of their assets are still underwater 20, 30 years later. So always look at the base support level. But the thing with trading, and this is why I'm so very vocal about people learning how to trade, is that if you're investing, you really should learn how to trade. Because if at the very minimum, let's say you're not going to sell your core stack, and let's say this is the 0% line. If you have a whole bunch of crypto and the market shits itself, and let's say it drops 30% and your whole stack is minus 30%, there's not much you can do other than hope that it goes back up in a timely manner. But if you know how to profit from markets falling, and let's say you don't want to sell your main stash, well, you can then trade it. You can just short it. So you could say, right, I want to at least hedge my position. So as the markets fall, you could lose 30% with your actual tokens that you hold, but you're trading, hopefully you could then make 30%. and therefore you're net neutral. Personally, what I tend to do is literally just sell everything and then still short everything. I'm not in this game to be net neutral. I'm in trading to make money. So yeah, this is why learning how to make money in up, down and sideways markets is quite good. But even better, when the market starts resuming full bull mode, not only will your tokens go up, let's say your tokens, double, which is very easy with crypto, as you know. If you're trading this as well, it acts as like a bit of a supercharger. So you can have, instead of being 100% up, you could be 150 or 200% up, etc. But yeah, it is very important. Do not put your whole pot into Bybit or a trading account. It should be I typically only have 20-25% of the pot in here. Another reason is that you don't want a singular point of failure. You don't want to put your whole pot in here, and then what if Bybit goes bust or you get hacked or whatever. So yeah, looking at this on the daily chart, looks like a little plopping coming. Others which have really shat the bed, Axie, and obviously if Axie is going to go down, SLP will go down with it, which, SLP has terrible tokenomics. I've been shorting SLP for a while. Again, look, base support broken, game over. So in fact, I've been going in and out of SLP for a while. Do I still have SLP? Oh no, it got stopped out. We're definitely in it. So if you look at the trading, was it in this screenshot? ICP, no. I've placed a lot of trades today. SLP definitely was here today. So I think it may have stopped out for profits. SLP, yeah, I must have moved the stop. Yeah. Anywho, hope that makes sense. Long story short, although fundamentals are pretty damn bullish, I can't see any bullishness for a while. I think we've got crypto. I think Bitcoin back to sort of 32k. Again, that's really what I'm looking at, and especially looking at Monero. Guess what? Base support's broken. Not only that, we have a high test as well. This looks ripe for shorting actually, and even it's reacting off the 200 EMA on the 4-hour chart. So actually, I quite like to short this, to be honest. This is the only thing I don't like doing is shorting the bottom of big fat red bars. There's never a wise move to short the bottom of big fat red bars. Not only that, is like, let's say you're acting on this on the 4-hour chart and you want to short it down here. So let's just, hypothetically you're shorting it down there. Where's the sensible stop? Ideally, you'd want your stop at sort of 242.62. So somewhere safe, so it's out of the noise in case there is a bit more chop, and it could end up in being sort of a bearish rectangle. What you don't want to do is have your stop in here or here or here. You need it out of the noise. But so if you're like shorting it here with a stop up here, you've got a huge amount of area here. So your position size is going to be very small if you have, say, a set fixed position size. So ideally, instead of shorting up here, you could just put an entry sell order, like here. At least your position size will then be double compared to shorting it down here. So we'll see. I'm not going to touch it just yet. Again, shorting the end of a big red bar is never wise. So yeah, I'm just going to keep an eye on that for now. Anywho, oh geez, 15 minutes. I thought this was only going to be a 5-minute update, but yeah, just so you know, all the indices basically shat themselves on Friday. Google, Netflix, they're all having a terrible time. The Dow shot down, the FTSE shot down, S&P 500 shot down. So if you look at Alpha, Alphabet. Google, so let's look on the daily chart. Yeah, it's not having a good time, especially if you draw base support. You know me, I love that base support. It actually breached base support a fair while ago, and it looks as though it Kobo'd. So it got base support, broke it, Kobo'd, so kissed off, buggered off. Again, when you look at Netflix, it's quite shocking how much Netflix has gone. I mean, even when you look at it as a, like a normal company, it's still making a shitload of profit every year. Personally, I don't think it deserves this much of a fall. I mean, I know everyone's saying it's lost 200,000 subscribers, but don't forget, it lost all its Russian subscribers, so it's not really a fair comparison. But hey ho, right, gotta love you and leave you, and I will see you all soon. Cheerio. Bye bye.